What's up, motherfuckers? Alright, well, I'm in a great mood because Mavs are up 2-0 against the fucking Clippers. Fuck you. But anyway, so, sorry, I still just wanted to do a video because, even though I'm on holiday and the sound is shit and whatever, but, I just wanted to put my thoughts out there on the big price action with gold today, right? I mean, we finally broke 1900, the level that we were talking about. So yeah, this is a good money day for me. Fuck yeah. And I hope it was a good money day for you. Um, so I just want to kind of talk about what I've done so far quickly and, what I'm kind of expecting next now that we've broken 1900. What do I see happening? Where do I see the market potentially going? Um, you know, given all the different things going on, both from kind of a TA standpoint and also from a news standpoint. But anyway, so yeah, just to show you, right, we're now seeing a pretty strong candle right now on the day chart in terms of that breakthrough of 1900. There was honestly no resistance, which was pretty fucking surprising. I mean, we definitely had some. If we look at the 15-minute chart, oh, sorry, we tried to kind of get up there at one point and we got rejected at 1895. We kind of touched it here and we went sideways a bit, but I mean the resistance was minimal, and that's definitely surprising and definitely very, very, very bullish. I mean, I think it's clear that people are not betting against this market right now, against the gold market. It's not the time to do it. And again, it's not the time to do it given that gold is probably the one of the few assets that I would still say is not just completely overextended. um, the economic environment is right for gold right now, 100%. And most importantly, I mean, just look at yields. You know, everybody was previously expecting yields to, potentially get to 2.0%, 2%. But ever since, again, like this whole narrative that's been happening with, like, not increasing interest rates, blah, 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 and all that stuff from the Fed, I mean, when interest rates are going to continue to decline like this, for 10-year treasury yields, people are going to take more risks or put their money into other things, which may be a better hedge against what's going on, hedge against the dollar. So and people are going to continue then also to speculate, right? Because they're not going to, why own bonds right now? Why do that? I mean, the interest rate's going down and the patterns look good. I mean, it looks like we're just going to continue going further. So everything is kind of setting up. I mean, yes, from a dollar standpoint, okay, right now on the shorter time frame, we're kind of seeing a slight comeback, but overall, I mean, is your expectation that the dollar is going to start going back up anytime soon? I mean, what's going to cause that? Okay, the GDP data that may come out, but if the Fed's not going to increase interest rates, I mean, forget about it, right? If we look on the day chart, it's just it's fucking bloodshed, right? Um, so I don't see this trying to come back up. I mean, maybe tomorrow we'll get some pretty serious price action with the GDP data, but nah, not really. I'm still pretty bullish on gold. Now, so what did I do since we crossed 1900? Like I mentioned in the previous video, I had three positions open. I sold one of them for a profit, kept the other two open, and I actually opened a small zero point 0.5 margin position at 1902. Um, just to kind of see where the market is going to go. I kind of thought it was a good idea because we just broke through that with such ease, and I feel like we're going to trend a bit higher before we start seeing any kind of corrective or, retracement. But again, a small position, like very, very low risk. Um, and I've already actually moved my stop loss so that if for whatever reason I were to stop out and the market would fall below 1900 again, I would just get stopped out for a very small profit. So I just thought that was kind of the smart thing to do. But the larger question is, so what can we expect now for the next few days or potentially few weeks? And the reality is that there was very little resistance. So like we mentioned before, going from 1800 really to 1900. I mean, you could see that, and you could just see it from the price action here. There's just not a lot of price history, so um, I expect kind of the same with the 1900 levels initially. There's kind of two kind of key levels that I'm paying attention for. The first one is around 19, between 1922, 1923 up to 1928, where we had previous resistance here before, and it was support here at one point in time. But I don't see this level as particularly strong, given the momentum that we've had. However, the more important level I think that we really, really, really need to pay attention for, if we're going to continue this upward momentum and the GDP data, etc., doesn't bring us back down because of, macroeconomic things. I think the most important level really is this 1960 level. There was clearly a double top here at one point on the progression down towards the 1680 double bottom. And one thing that we definitely want to make sure that we don't see is a triple top, um, which could potentially happen and could signal like a stronger, correction in the market, like especially on more of like the longer term time frame. However, I don't think it's going to be anything too serious. Like I don't think it's going to signal complete reversal back to a bear market. If we do see a rejection here, which I expect, and I mean, come on, guys. I mean, look at this fucking price action on the day chart. Like, it's just we've been, basically since the last week and a half. If you put a bullish position, if you opened a bullish position or a long position, you would have made some nice ass money, right? So, we got to expect a retracement at some point, and things can't go forever. I expect we may see a bit of a retracement or just at least like sideways action here, but again, at like 1925, 1928, 1923, but the key level really is this top here where we previously had the double top. I'll draw it out for you here, just here, right? So that's really the key level to pay attention for. And I'm still not sure what I'm going to do once I hit there. I most likely will close another position. But before we hit there, I still continue to plan to buy, maybe open another couple long positions. If we look at the shorter term time frames, what I really would like to see as well, which we kind of did already, if we especially look at the 15-minute chart, 1 second, especially if we look at the 15-minute chart, what we've been doing is we've been kind of always hitting when we see a peak here, we always kind of go break through that support line, right? If we draw the support line here and we kind of break through it and then we go back down and we make it support and then we continue higher. And then you can kind of see the same thing again. This became a new resistance level and we broke higher and came back down, kind of made a support, right? And so forth. And we've been kind of repeating this pattern, which I think is a very healthy upward trend pattern. We did it once here already, actually, at around the 1900 level, but I would really like us to kind of get back down to the 1900 level, honestly, even though it stopped me out. But I would like to get back down there and just kind of make it more support, which would then signal to me really like, okay, like it's actually a good idea to hold, some long positions at the lower 19 to 1920 levels, aiming for that 1960 top there. So that's kind of how I'm going to play it. And if you can get it right, especially if you can get some positions in between this 1900 to 1910 level, and we get that kind of initial bounce back or even a drop to 1890 or 1895 and back up again, just to kind of see that, classic price action of break through the resistance, make it support, then I would feel a lot more confident to open, a couple more positions at this level and aim for that 1960. I think that's a good risk to return ratio, but I need to see that confirmation there. Anyway, guys, if you have any questions, just let me know. Let me know what you think as well, like if you think we're going to continue this bullish momentum or not, and if you think that 1960 is really kind of a key target we need to look at. Anyway, take care.